Welcome everyone to Fundamentals Unfiltered, the Fundamental Investing Institute's weekly market show. Because this is our first show, I'm going to do things a little bit differently. I'm just going to focus on one theme at the end, but I wanted to recall a conversation I had with a dear friend a couple weeks ago. This dear friend's about my age. He is a successful real estate development executive. He is a very big picture thinker when it comes to the economy, one of the most thoughtful people I know. And what we were talking about was all of the economic uncertainty. Of course, in his field, we're seeing a real estate slowdown. I mean, things got, I think a lot of people would call it a correction. Certainly our part of the country in Florida. But we were just talking about all of the economic uncertainty globally, not just short-term political uncertainty, but just a lot of global trends that are going on. And he is, like I am, very much a student of economic history, business history, financial history. But we were also talking about the things that we live through in our adult lives and that we've seen in our career. Both of us started school, undergraduate. We both studied finance at the undergraduate level, and we both came into studying that field right after the dot-com bubble. And of course, we had 9/11. We had a wave of corporate scandals in the early 2000s. So markets were really in an odd place. And then, of course, when he and I came out of school, undergraduate, we immediately entered into the real estate bubble of the mid-2000s, and then later the financial crisis. We were both in the real estate development business at the time. And of course, in the last few years, we've had the global pandemic. We've had the inflation that started in 21. So there's a lot of lived history there, but the point of the conversation that we were having was the importance of using history, lived history, studied history as a guide to getting through the noise. There is more information noise than ever now with social media and other venues. So that's going to be a big part of what we do on this show, is trying to anchor things to historical experience, both my lived experience and a lot of different business trends that I've studied in my career. And I think we should have a healthy appreciation for risk. That kind of gets lost. People always want to talk about the upside, but that point gets lost in things. Now, I should say, I do have formal academic training, professional training in finance and business strategy. Studied those subjects at the undergraduate and graduate level. Did a lot of postgraduate work and executive training in those fields. I have worked in the real estate development world. I have worked as a securities analyst for both institutional and retail clients. I am first and foremost a private investor. And the work that we do at the Fundamental Investing Institute is to provide educational content to small business owners who are trying to seek capital and private investors who are trying to make better decisions and need tools with which to analyze companies. Now, we try to get through the noise that is sort of irrelevant or less relevant or just can't be known for fundamental investors and small business owners. Now, because this is our first show, we're just going to focus on one theme that's been in the news, and it's a theme that I think is going to be with us for a long time, and we got to get used to it. I don't know the answers to this, but I'm going to bring up some things that I think we should think about. This is an article in the Wall Street Journal. It came out July 29th, 2025. AI is wrecking an already fragile job market for college graduates. So what this article is saying is that the kind of grunt work that graduates, even graduates with hard skills training, so think about finance and marketing and computer coding, other areas of technology. Of course, they're coming out and they know quite a bit, but they're still entry level jobs. And normally they would do a lot of grunt work for a year, 2 years before taking on broader responsibilities. Of course, what's happening now is artificial intelligence is doing that work. So I was thinking about my own experience when I was first entering the job market, both through internships and in my first job. And lo and behold, a lot of things I was doing right now can be done and is being done by artificial intelligence. So, for example, doing research and writing reports, which was a big part of my responsibilities in my early career, of course, that is now being automated. So the article goes on to state that the broader unemployment, which is around, I think, 4.2% or so for the broader economy, it is significantly higher for recent college graduates, well over 6%, according to the article. And the unemployment among recent college graduates is now rising faster than for young adults with just high school or associate degrees. So, in addition to the problems of the job market, of course, these young people have a lot of debt in order to get those degrees. So, there has to be a rethink now of what kind of skills are needed. My own 2 cents on this, which is worth about half a penny, is I think we need to elevate the humanities. I'm not saying an exclusive humanities-laden education, but certainly kids that are studying finance and computer coding and all sorts of things, there's still going to be a need for critical reasoning. There's still going to be a need for communication skills. So I don't know the answer, but my point from the standpoint of longer term economic trends is if we're having possibly several generations of college graduates who are not able to get these entry level jobs and not able to do the groundwork and gain these skills, I think this is going to have implications 5 to 10 years down the road that we just can't quite understand. You know, the Ford CEO, Jim Farley, he said recently he expects AI to replace half of the white-collar workforce in the U.S. We hear similar things from a lot of other executives, and this is just a fact of life. This is not going to go away. We are going to see more and more headlines of this type going forward. Again, I don't know what the answers are, but it's going to have to be part of our national conversation in serious ways, and I just hope that it becomes something fruitful. Now, the Financial Times had a very similar article. This is talking about Microsoft, and of course, if you've been following the financial news, Microsoft is now greater than $4 trillion market cap. It had a great quarter. These companies, these big tech companies, are investing hundreds of billions of dollars into AI infrastructure. The rate of technological advancement is going to be beyond anything that we've ever seen. We are in the middle of an investment boom, a corporate investment boom that rivals anything in U.S. history. It rivals the big investments of the railroads at the turn of the last century. It rivals the big wave of investments in media and telecommunications. Things are going to be significantly different in terms of how companies drive revenue and profits with less and less workers. And we also have to think about what this means for workers themselves. I know of no area of the U.S. economy that is not going to be impacted by artificial intelligence. And it's something that we're going to talk about on this show. I don't know the answers, but it has to be part of our national conversation as we move forward. So this is my point with artificial intelligence. This is probably going to be the biggest driver of capital markets, certainly the big stock indices, which are very much heavily reliant on tech companies. This is going to be the biggest driver in the next 5 years, even beyond all of the political headlines and everything. Artificial intelligence is going to be the biggest story, and it's something that we're trying to figure out to a large extent. Not so much in terms of the technology, because that's not my background, but in terms of what this means for individual companies, what this means for markets, and frankly, what does this mean for the mainstream economy? Because I can tell you one of the other trends that's coming along, I think driving a lot of economic anxiety, doesn't get talked about enough, and that is the role that private equity firms are playing in greater and greater degrees of ownership of mainstream businesses, right? So investment firms that are investing on a 5 to 7 year basis, they're very transactional. They're coming in trying to cut costs and increase efficiency. They are owning a larger and larger swath of the American economy, and if they can enhance efficiency, that is, do more with less workers through the use of artificial intelligence, we're going to see an adoption of that technology in the mainstream economy far greater than what you would have otherwise. So this is just something that we're going to talk about probably more than anything. Now, in next week's show, what I want to do is talk a lot about interest rates, but I want to go into a greater level of depth there. So we're going to end that here for today's show. I just wanted to kind of introduce the show, introduce some of the themes that we're going to talk about, and say a big part of the show is going to be on artificial intelligence and how this is going to affect the U.S. economy, simply because this is going to be the biggest theme by far. This is going to be the biggest theme in the U.S. economy over the next 5 to 10 years. Thank you, everybody, for tuning in. We have great content coming up on future episodes, so if you want to hear more commentary on business and investment matters ranging from the Federal Reserve to AI to all sorts of things, then hit like and subscribe, and you will stay in the loop on future episodes. And as always, focus on the fundamentals.